Hello, it's Robert Miner with Dynamic Traders Group with this week's DT 5-Minute Update and Trade Strategies. If you like what you learned today, check out my book, High Probability Trading Strategies. And of course, if you want to have more details every day about every market that we follow in our DT reports, check us out at dynamictraders.com. We have some very well-priced reports that are ongoing education, ongoing analysis for the major financial markets, and a couple commodity markets. Okay, let's get started. The first market we're going to look at is soybeans. Now, I realize most of you listening to this don't trade soybeans or the other agriculturals or some of the other commodity markets, but you should. You should follow one or two of them because they're really great trading vehicles with relatively small margins for most of them anyway, and you can participate in some major trends with some minimal capital exposure. Soybeans is one of them. I've been trading on and off for 30 years, and I'm always following soybeans. This is the weekly data, and a couple weeks ago we made a dual look-back momentum bull reversal in the weekly data, nowhere near the overbought zone, and since our DT oscillator oscillates pretty smoothly from overbought to oversold, that implies that there should be another 2 to 3 weeks sideways to up in soybeans. And if we look at the last weekly lows, we had some pretty significant advances. 5 weeks up, 8 weeks up, 4 weeks up, and some pretty good price ranges. So even if we just have a weekly low comparable to these last three, or even more for that matter, is we should have a ways to go on the upside over the next 2 or 3 weeks. So this is really a great market to take a look at right now. And here's the trade strategy for you to look at. And of course, you can apply this to other markets and other time frames, whether it's Forex or other futures markets, whatever. But here we are as of this big wide range outside bear reversal day on Friday. We probably completed what in Elliott wave terms is a 5-wave advance. We've in our daily momentums made a dual look back bear reversal 2 or 3 days ago or so, and we should be sideways to down for another 2 to 3 days because usually the daily momentum, our DT oscillator, gets oversold before a corrective low is complete. So that would give us another 2 to 3 days, probably sideways to down. So here's the specific trade strategy, and you can use whatever momentum rate of change indicator that you use. They're almost all the same. They're all based on open, high, low, close, and pretty much related to the rate of change, as I devote a whole chapter to in my book, High Probability Trading Strategies. But the next momentum, daily momentum bull reversal, will put the daily momentum in sync with the bullish weekly momentums to probably continue the bull trend and complete a correction and then be bullish. So that's what we're looking for. We make that bull reversal on the daily momentum, probably this coming week, it's going to be a setup to go long. Why do I have this horizontal red line here? If soybeans were to close below 880 before making that daily momentum bull reversal, I would void the immediate go long setup, because if the trend is bullish, soybeans should not close below 880. It typically wouldn't close below that. So that's my, we'll call it the stop out point right now for the go long strategy. Doesn't mean, now I won't formulate a different go long strategy if it does that, but I'm going to be taking a hard, close look at the position of the market if we close below 880 to see if it's still worth a long trade. So that's what I'm looking at the next couple of days in soybeans. A great setup for a potential multi-week trend, very minimal capital exposure. So here's something I think is important I want to bring to your attention, and that's notes. Of course, bonds are in substantially the same position. And notes may be setting up here, as well as bonds, to complete a weekly high, a fairly significant high. That's the possibility anyway. Our weekly momentums have already made a dual look-back bear reversal in notes. And while that doesn't necessarily pinpoint a top, it warns us that the upside should be very limited before we complete a weekly high. That's a high that's going to last for several weeks. So we've made the bear reversal and the dual look-back bear reversal, in fact, from the overbought zone. That's pretty significant in notes. We have a potential 5-wave advance for you Elliott wave folks. You know that 5 sections is usually indicates, if we're in the fifth section, we're in the final section of that advance, so that itself is telling us that we should be near a weekly high. Here's the daily data. Daily momentum reached overbought on Friday, so that's warning that we're near a daily high. In the next smaller time frame, daily bear reversal should then coincide with the higher time frame weekly high. And of course, this wave 5 of higher degree that was shown on the weekly charts is subdividing beautifully into 5 waves again, multiple time frames from Elliott wave, indicating that we're very near, we're probably very near at least a weekly high. It's high going to last a few weeks. Right above the market is the end of wave 5 target zone. I won't go into details about that. But of course, we got tutorials about that for our subscribers. We've got about 70 recorded video tutorials and archived and table of contents sorted and everything for subscribers to our DT reports. That alone's worth a few $100. Okay, that's my pitch on the reports. Let's get back here. Notes coming near the end of wave 5 of 5, the end of wave 5 price target zone just above the market. And next week, this is just 2 of several key time factors that should complete the next daily high, which should be the 5-wave advance up from the December low, which has the potential for completing the higher time frame 5-wave advance from the, when was that made? December low. So just be aware of that. If you're long notes, you certainly want to be bringing those stops really close to the market and preparing for the high probability that we're going to make a weekly high here next week, and you might be considering even short positions for notes and bonds once the high is confirmed. And so there, we have to have the what I call pattern reversal confirmation signals. So we give those in a report once a high is made. But whatever technique you use to confirm that a reversal has been made, if that signal is made here in the days ahead, then we've probably completed a weekly high. Pretty significant. One more market to take a look at. Let's take a look at gold. So here is gold weekly data coming up from the August 2018 low. And I want to review gold real quickly because I've been taking a look at it on and off for several weeks. And I had been anticipating right up until the last week, a week or so ago, that we'd have another 2 to 3 weeks sideways to down in gold before we completed this whole correction that we were making. Well, the market did not comply with that, and gold shot up to a new high this past week. Had a big advances last week, and what's significant is it came straight up to 162% external retracement of wave 4, and that's typically around the maximum of where we find the end of a wave 5. And of course, the wave 5 is subdividing into 5 as well. So I just want you to be aware that potentially we're in a position to complete a weekly, potentially even monthly high real soon here. And if we're going to do it, it's probably going to be done by next week because there's some daily time factors next week. Here's our weekly momentum. It's dual look back bearish from the overbought zone. Again, that usually indicates that we're at or near the end of a weekly high. We're about to make a weekly high, and the upside should be pretty limited. So keep that in mind. Now I'm not going to go in detail on this. I did with subscribers in our extensive video this past weekend, but silver and the GDX are in a very bullish technical position. So boy, what happens when you got a conflict? You got silver and GDX in a bullish position, technical position, and you've got gold, which is looking to be or at very near a very bearish technical position. Well, that's when then you have to identify specific actions in the days ahead that will confirm or invalidate what the higher time frame trend is. And that's what we identified for our subscribers. That's saved for them. They paid for it. But it's enough for you to be aware that this is potentially a significant high up here. And at least be aware of that. That's it for today. Take care. Have a fantastic weekend.